When you buy an index, you're buying the index. You're guaranteeing yourself average results. Do you want to be average? I certainly don't. My goal in investing is to be above average. I want to be able to retire young. I want to be able to come to places like this more frequently. Hey everyone, this is Ian from ppcian.com. I am back with another video about dividend growth investing. Today I am broadcasting from beautiful Kaanapali Beach in Maui, Hawaii. I'm here on vacation. So let's jump right into it. I have been receiving some questions from my viewers about index funds, and they've been asking me, Ian, what do you think about them, index funds? You're a dividend growth investor. You invest in individual stocks for income, for cash flow. You want to surpass your living expenses with income and cash flow. What do you think about index funds, exchange traded funds, ETFs? Well, that's the topic of today's video, and I'm going to discuss some of the pros and cons of index funds versus individual stocks, especially from the perspective of a dividend growth investor, someone that wants to have enough passive income and cash flow to cover all of their living expenses. So first and foremost, individual stocks give one more control. Even though there's not a lot of transactions in an index fund, stocks do get bought and sold from the index. There's stocks that enter the index, stocks that leave the index. That's trading. I am an investor who never trades, rarely trades. I buy, I hold, I never sell. And so the beauty of individual stocks is they allow me to achieve that strategy of buying and holding. Whereas with an index fund, even though there is low turnover, there is some turnover. So I'm just going to refer here to my notebook. I'm juggling a selfie stick and also my notebook. I please do hope you enjoy the video. I know it's a little shaky, but I hope the great scenery in the background makes up for it. Let's see, what else? Individual stocks, in my opinion, you will get, or one could get, superior results. When you buy an index, you're buying the index. You're guaranteeing yourself average results. Do you want to be average? I certainly don't. My goal in investing is to be above average. I want to be able to retire young. I want to be able to come to places like this more frequently. Maybe I don't even want to retire young. Maybe I guess what I say when I want to retire young is I want to have this ability to retire young if I want. I want to have that financial freedom. But maybe I don't retire young. Maybe I just use the cash flow to come to places like this time after time after time. There are many options. There's a lot of flexibility that comes with being a dividend growth investor and having above average results and having an above average strategy. And so I believe following the index, being average, that just doesn't align with what I want out of life. And I want the most out of life, so I have chosen not to go the average path. I've chosen to go a different path with individual stocks that pay an increasing stream of dividends. What else? There is more risk with individual stocks. When you are selecting individual stocks, if one of them goes down, it can impact your portfolio. The way I get around this personally is I own over 30 stocks that all pay dividends. And so I have gotten around this risk through diversification. However, with an index fund, there is a huge amount of diversification because the S&P 500, for example, has 500 stocks in it. That's a lot of diversification. If one is a very nervous investor, doesn't want to take on any additional risk for superior results, index fund might be right for them. And that's okay. Just not who I am in my personal portfolio. What else? Lower fees with individual stocks, especially with a dividend strategy, very fee efficient. Sometimes you will pay fees when you buy stocks unless you're in a DRIP plan, dividend reinvestment plan, that carries no fees. However, other than that, and sometimes reinvestment fees, but oftentimes I optimize towards stocks that have no reinvestment fees for dividend reinvestment, very low fees, very, very low fees, incredibly low fees. However, with index funds, you're paying a fee for the service to the mutual fund company of holding the index. So there are fees. They're lower than a managed mutual fund, but there are fees. What else? Individual stocks, more work. I love the work. I call my portfolio my dividend machine. I view it as a business. I treat it like a business. I spend time on it like it's my business. If that's not for you, it's not for everyone. If someone is not really interested in individual stocks, index funds are a great option. I like index funds, by the way, if one is only considering index funds versus actively managed mutual funds. Actively managed mutual funds tend to underperform index funds. So if one needs to be buying mutual funds, index funds are oftentimes a great way to go. But again, if one wants to put in the work, individual stocks, in my opinion, are the right bet. And that's what I've done in my personal portfolio. What else? Okay, here's a good one. This is important. Index funds need to be used in certain portfolios. If you're managing money for a charity, for example, like Dividends for Hope is, Dividends for Hope, by the way, is a subscriber here, supporter of my channel. He's just starting a charity that has huge aspirations to do good in society through dividends, to use the dividends. I love this idea. And as soon as Dividends for Hope started commenting on my channel, I saw his idea, I started contributing to his charity. Dividends for Hope, I hope he comments below so all of you can learn more about what he does, is using index funds. This is the right move for a charity because a charity has a fiduciary responsibility. There are certain organizations out there like charities, like educational institutions, pension funds. They can't take on the kind of risk that I can take on. I don't feel like I'm taking on undue risk because I'm buying world-class blue chip stocks. Certainly not a trader, certainly not doing penny stocks. That's risk in my opinion. That being said, the definition of risk for a charity is very different than the definition of risk for you and me. Charities have a fiduciary responsibility to the funds that have been endowed to them, and so index funds are a great option for them. And so Dividends for Hope can tell you all about why he has chosen index funds for his strategy, even though it's a dividend-oriented strategy. Here's an interesting point. If you are interested, like me, in living off dividends, I don't think it can be done easily with index funds. It's just not going to happen, in my opinion. One can debate that. Depends on your timeline. I want to be living off dividends before I'm of retirement age. I'm in my 30s right now. I've come a long way. I've been investing for over 20 years. Been really going heavy in the dividend strategy for a while now, and have learned over the years. I've made mistakes. I've had triumphs in the market. This is my strategy. But I need this strategy. I'm doubling down on this strategy. If you've seen some of my other videos, sometimes I take a little risk. I get a little overzealous on this strategy because this is my strategy. This is my business, my machine that will allow me to retire early. It's an unconventional method. I have to take unconventional methods because I'm trying to do something unconventional, a bit unconventional in life. What else? I want to close out today just with some key points. Individual stocks you can optimize for dividends. In the index, there will be stocks that don't pay a dividend. When you buy individual stocks, you can make sure all of them pay a dividend, and a growing dividend. And so that's great, that's important. But with the index, they might not all pay a dividend. And so why would you hold an index if you're a passive income cash flow investor? Why would you hold the index fund if it has stocks that don't pay a dividend? Something worth considering. Another key point. When you have a portfolio of individual stocks like myself, I have over 30, I can buy the ones that are on sale. When you buy an index fund, you're buying all the stocks at once, the ones that are overvalued, the ones that are undervalued, the average. When you buy individual stocks like myself, you can buy the ones that are on sale. That's amazing. If I have 30 stocks, there's always a few that are really, really deep discount values at a given time, and I can buy into them, get better return on my money, better starting yields, better compounding effect, better value for my money. Last point, index funds include junk. By definition, I heard this at an economics summit. Index fund has to buy the index. Some of the stocks in the index are not good. Because everyone puts their money in the index fund lifts these stocks that aren't that good. So it's kind of a weird effect where stuff that isn't that good is getting lifted above the valuation that it should have, but stocks that aren't in the index, maybe they're getting underweighted. Maybe there's value out there that that the index fund investors aren't getting because they're just getting the index. And so it's kind of a nuanced point here. It's an interesting point. It's one that's a little hard to get your head wrapped around. But it's just this fact that the index fund is so popular now. It is so pervasive in the financial industry. Everyone's putting their money into it. So anything that's in the index is golden. It's getting rewarded, regardless of performance of the company. And so some stocks in the index may not be good companies, but they're getting lifted because all the money is flowing in the index. By contrast, if a stock isn't in the index, it might not be getting lifted. Might be some great value out there, and there is in fact some great value out there in my opinion. This is Ian Lopuck, ppcian.com. Friendly disclaimer today, I am not a licensed investment advisor and this is not financial advice. This video is just for your fun and entertainment. Please consult a licensed financial advisor before making any investment decisions. If you enjoyed the video today, I please invite you to subscribe, to like, to comment. All of that means the world to me. It's the greatest compliment you can give me. I thank you so much for watching. This is my video about index funds and ETFs versus individual stocks from a dividend investing standpoint. I will see you in the next dividend investing video.